Hi, it's Grant Bailey from Enable Deposit Solutions, and today I'm joined by Dominic Cavagnino, Head of Property Research at Benari Property. So, Dominic, just want to get an idea today on the Sydney property market, how it's likely to perform in 2025, and from an investor's perspective, taking a longer-term view over 5 years. But if we could start by just getting a bit of a background on what's gone on in the last, 3 or 4 years. Certainly COVID, we've seen a lot of growth, but you just do a bit of a market cap on what's going on in the Sydney market the last recent years.
Yeah, so Sydney market, as always, has been fairly strong. Not the strongest in the last 3 or 4 years in comparison to other cities, but I believe since March 2020 through to 2024 March, it kind of increased about 30%. Kind of seen throughout the last 12 months, like 6% growth on the average sort of dwelling price in Sydney. So still, I think to sort of, not a bad figure. But yeah, it hasn't been as strong as say what we've seen in some of the other markets, where you've seen sort of double-digit growth of 15 through to 20% through 12 months. City market's strong as it kind of always has been. It's definitely showing some signs now of being a bit more strained from an affordability point of view, and that was inevitable when you had interest rates rise quite dramatically over a fairly short period of time. I think people's borrowing capacities have been brought down. People's mortgage payments have increased quite dramatically. A lot of people coming off fixed rates and so forth.
Sure.
Led to people being a bit more strained. So I think the market is very different in very different pockets. I think places like the eastern suburbs, the northern beaches, the very inner western parts of Sydney naturally are always going to be pretty constrained from a supply point of view, and probably are a bit of an anomaly within the market, particularly those really high end sort of areas. Broadly speaking, though, I think we've definitely seen in the last sort of 3 to 6 months probably a little bit of a slowdown in Sydney's property market. I think
that's just to generalise everywhere.
Just generally, clearance rates have come down a little bit. The days on market have increased a little bit. So it's not, it's not sort of panic stations, but it's definitely kind of taken a little bit of the heat out of it. So
do you think vendors, sellers have yet to sort of lower their expectations, or their expectations are still
that probably too?
Behind?
I think people always find it hard when they know that their home was worth $2.5 million last year to then sell it for less than that this year, kind of thing. And that's one of the realities. People often don't like to see their home go backwards, and it's not necessarily a long-term thing. It'll probably bounce back up. But I think the readjusting of vendor expectations has also sort of led to those sort of lower clearance rates and longer days on market. It's probably a mix of, agents giving them this of what they could potentially achieve, and the reality being a bit beneath that, and then sort of having to readjust expectations.
Manage expectations as they do.
Yeah, correct.
That's why they get paid so well, right?
Yeah.
So what, in terms of the 2025 moving forward, you've just summarised what's gone on in the last few years. So 2025, how do you see that progressing in the Sydney market?
I don't see it changing massively from what it's doing right now. I think it's probably going to be fairly subdued through 2025. The one thing that's hanging over everything is whether interest rates start to come down and how that will impact the market. If we see a couple of rate drops, will that then give everyone a lot of confidence to jump back into the market? My view probably is that the market will sort of kick on after we see a couple of rate drops. The thing will be that it is still a lot higher than where it was, and I think people's the holding cost on a property in Sydney is quite high. So it's just whether or not people can afford those. But I don't think the market's going to perform poorly. I think Sydney's always strong. The one benefit Sydney has is it's very constrained. We don't have the ability to sort of continue expanding out.
Sprawl that you have in Melbourne.
Correct. We've got coastline, mountains, national parks, north and south. So it's quite tricky to sort of expand out. And I think for investors, the challenge is that the availability of stock at a price point that is suitable to investors is quite limited. And if you're limited to buying an apartment per se, which is not the worst thing in the world if you're buying as an entry point to get into the market, but if you're purely buying from an investment point of view, and buying an apartment means you end up in an area where there is a bit more saturation, that can...
So something like Parramatta, which is over...
Correct. Macquarie Park, which has a lot of supply. Right. Places like Liverpool have a lot of supply. The Zetlands and the Alexandria is kind of a fair bit of supply. It's not to say that they're never going to grow or not going to perform, because all of those places can be seen as fairly convenient places to live, depending on where you work and so forth. But from a pure investment perspective, having that ability to supply those markets can be detrimental to your capital growth that you sort of achieve.
Well, there's that challenge, I suppose, with that need to create more housing and the medium to high density.
Yeah.
As getting some sort of uniqueness about what you're buying into, or something you're getting into something, a boutique development.
Yeah.
Becomes a challenge. But then, I suppose that's countered by the fact in Sydney you do have the large 5 million plus population base.
Yeah.
The infrastructure works is going in terms of metro stations and things like that.
Yeah.
Is really going to, I think, assist or support prices on those sort of
and I
locations.
think those areas where you are seeing a bit more supply of apartments, you just want to be consciously buying where there is, that connectivity or that ease of access to the new metro stations and things like that. So, I think there's opportunity there. It's just about, being able to manage finding those opportunities within a price range that is feasible for an investor,
Okay. So Sydney's all about, it's positive moving forward. The challenge for an investor is really the entry point comparable to, say, a Brisbane or a Gold Coast.
Yeah. And I think the other challenge is that, the other consideration is it's not uncommon for Sydney to go through a stagnant period. Between 2004 and 2010, Sydney didn't move. Between 2017 and 2020, Sydney had a really slow 3 year period. Then COVID kind of kicked it along. Sydney probably is due to be stagnant for 4 to 5, 6 years. And that doesn't mean that it doesn't move at all, but it just grows at a far more conservative rate, I suppose. And I think from an investment point of view, when you're investing, you're generally investing to create as much capital growth as possible in the shortest amount of time. And no one has a crystal ball and is able to guarantee that kind of outcome. But there's no doubt that buying in a market like Sydney, where affordability is so strained, would not probably be the best idea when trying to achieve that. And I think I read something the other day that kind of, I guess, really highlights just how significant the strain is. Sydney accounts for 67% of all migration from capital cities to regional centres. So nationally, anyone moving from a city to a region, 70% of those people are coming out of Sydney, just showing that Sydney really is where people are most strained from an affordability point of view. So that will always limit your potential growth, I'd say. Yeah.
Well, there's that affordability, but also the lifestyle features also come at a greater expense than the regional areas as well. So.
Yeah. So, okay,
well, Dominic, I appreciate your insights and you being with us today.
Thank you.